from the prison of poverty, from the prison of lack of money to reach out to people, lack of money to do some investment in worthy ventures. And so this is a thought I have for you this day. Of course, as we begin a new week, think about it. Are you financially independent, or you're rather still dependent when it comes to finances there for you? Now, you have to remember that the show is proudly sponsored and brought to you by Altex East Africa, the #1 stock exchange, private stock exchange in East Africa. Now, Altex East Africa, in conjunction with Altex Clearing, came up with an initiative where you can now be able to buy treasury bonds across the region, that is in Kenya, in Uganda, and in Tanzania, at a very good interest rate. And of course, these bonds now are accessible via the USSD code *292#. And of course, at first they partnered with MTN Momo, where you could easily access these markets via the mobile money payment system, and be able to upload funds and get to purchase several bonds. Also, those who wanted to sell were able to access customers or clients who are in need of buying, and they were able to get the funds on their mobile money. And so the initiative, that's how it began with MTN, but now it has spread out even to Airtel, and some Airtel users can now still dial *292# and follow the prompts to be able to buy treasury bonds across East Africa. For starters, treasury bonds are long-term financial instruments, or long-term loans, transferable loans in particular, that government uses to borrow from the public. And so there are loans that are given to the government via the Bank of Uganda and several other dealers, like the primary dealers, to be able to, of course, raise money or revenue to facilitate the activities or the business of government. And these instruments come at a return, and sometimes it's a long term, sometimes it's a short term. On the short term, we have the treasury bills, and that's called the money market. And here we have three kinds of treasury bills based on the period of maturity. We have a 3 months treasury bill, we have a 6 months treasury bill, and a 12 months treasury bill, or a 91 T-bill, 182-day T-bill, and a 365 T-bill. All these are instruments that governments usually issue as a way of raising revenue from the public by borrowing money from the public for the short term. We also have the longer term. In Uganda, the treasury bonds start with the 2-year tenors, and then we have a 3-year tenor, we have a 5-year tenor, we also have a 10-year tenor, a 15-year tenor, and recently we have had also a 20-year tenor. And so the Bank of Uganda invites people and different individuals and institutions on its auctions, which take place, at least for the treasury bonds, after 28 days, according to the Bank of Uganda annual calendar. And this invitation is based on the competitive investors, rather sometimes the competitive bidders who want to buy bonds worth over 200 million shillings or more. And when you get to the Bank of Uganda auction, you must have, of course, a rate, which later, of course, you compete with other people with different rates, and a favorable rate is selected and the bonds are issued. The non-competitive investors are those investors with or below 200 million shillings, and these invest, of course, after the competitive bidders, of course, have been selected and the rate has been affirmed by the Bank of Uganda. And this rate, of course, for the treasury bonds is divided into two, and that means that you're going to get money. Since it's an annual rate, you're going to get money every after 6 months, and at the end of 6 months you will get half the rate, and at the end of the 12 months you get the other half of the rate until the period of maturity when you get your initial deposit back. Or you can sell your bill or your bond on the secondary market where we have other buyers and sellers as well. So Altex East Africa is making things a little bit easier. No intermediates, no brokers, no primary dealers. Everything has been made easy with the convenience of your phone. By dialing *292#. You can now be able to access a myriad of treasury bonds, not only in Uganda, but in Kenya, in Tanzania. Of course, you might have to make your personal research, but they are offering you very favorable rates. One thing in particular, of course, that many people are concerned about is the variation of the rates. Now, these rates are not constant. These rates vary depending on demand and supply. You will find that today, the rate could be between 14 to 16% for a 3-year tenor. And then the next day, you find it outside that range. Of course, we have what we call yields or yield curves that, of course, are tracked by Bank of Uganda, depending on the inflation, depending on, the central bank rate, and so on and so forth. But these yields usually change, especially on the secondary market where we don't have a fixated rate. And so Altex East Africa offers some of the best interest rates on the continent. And you must check them out to see exactly how you can be part of that as well. And putting Altex aside, talking about the central bank rates and the debt market. Well, on the 6th of October last week, Thursday, there was another Monetary Policy Committee meeting that was convened at Bank of Uganda. And guess what? The central bank rate has been increased another time. I think this is the 4th time within a space of less than 3 months that we are seeing the central bank rate being hiked. And this was on a 100 basis points increase from 9% to 10% currently. And yes, this is, of course, due to the biting inflation that we are still witnessing in our economy, not only here in Uganda, by the way, but the global markets. And the central bank has said that it was left with no option because the inflation rate, that is when you look at the headline inflation rate, it has also almost doubled within a period of just about 5 months, from 5% to currently over 10%. So the central bank rate had to, of course, move fast to catch up with that. And of course, the central bank usually is mandated to be able to control inflation. And in times like these, it plays a very important role, especially in the financial institutions, commercial banks, and so on. The central bank has a very key performance attribute, of course, to see that the economy remains within controllable levels so that we don't have the inflation going over the roof. Now, at the Monetary Policy Committee meeting that was held on the 6th of October, the Bank of Uganda, of course, getting to refer to the statement that was released by Bank of Uganda. The Bank of Uganda increased the central bank rate by 1 percentage point to 10%. A combination of global inflation, global factors, and the recent drought and the weaker Ugandan shillings against the United States dollar exchange rate, and have driven the inflation to the highest recorded since 2012, and of course deteriorated the inflation outlook. Now, the annual headline inflation increased to 10% in September 2022 from over 9% in the month of August. And the annual core inflation, which excludes food and energy, rose to 8.1% in September from 7.2% in August 2022. The annual electricity, fuel, and utilities inflation alone also had an increasing beginning, of course, had an increase in the beginning of the year and declined to 18.7% in September from 19.6% in the month of August 2022, offering some bit of relief against the price pressures that have been witnessed. And of course, we have seen this across the different petrol stations, that at least the petrol and diesel prices have come down a little bit, but still that has been one of the main achievements, if I could say, at least for this period, with food, of course, still under very high prices, with commodities like clothes still under very high prices. At least the fuel and electricity have tried to come down a little bit. And of course, this has been portrayed in the report by the Bank of Uganda, rather the statement that was produced after the Monetary Policy Committee meeting last Thursday on the 6th of October. Now, in the coming months, the headline inflation is forecast to rise further and average around 7.3% in 2022, and that is between 8 to 10% in 2023 and about 5% in 2024. So we must be ready. We must, as according to these forecasts, it's not yet about to go down. We might still be going to go through a very tough economic time, especially regarding prices. So being frugal, like the president said, could be one of the things we could do. But of course, we can do still more than just being frugal. We could wisely invest our money for longer term gains. We could make ventures into different, investments, diversifying our portfolios, and try our best to remain financially stable within these tough economic times. And of course, this will be only achieved if you and I seek knowledge, and if you and I seek financial advice before making some of the decisions we make regarding our money. Now, the outlook for inflation is highly uncertain, as of course several risks lie ahead. Now, the balance of risks is tilted upwards, and the upward risks include the entrenchment of the higher inflation expectations, and of course the escalation of the geopolitical tensions that are associated with the supply chain disruptions, and of course a stronger monetary policy tightening by major central banks, further weakening the exchange rate, and the impact of adverse weather conditions on food production. These are some of the things that we could forecast, that of course the central bank is going to tighten the monetary policy, and of course this is regarding the central bank rate. The central bank rate has been raised way beyond what we could have expected this year, at least now to a double-digit figure, 10%. That is quite significant, and they're saying this could continue. So we still have to be careful with how we are using our money at this point in time. What does the central bank rate mean to you as an individual? Of course, you might think that it's a term that doesn't concern me. It's only for the banks that are borrowing from the Bank of Uganda. Well, it does concern you, because the central bank rate is the rate at which different commercial banks are able to get money from the central bank. There is no single bank in Uganda, except Bank of Uganda, that is mandated to print money. And so where do you get that money that you get to borrow from the banks? Sometimes banks borrow it from the central bank. In fact, most times, the commercial banks get this money from the central bank, or the Bank of Uganda. Now, they get it at the central bank rate, which is, of course, highlighted by the Bank of Uganda, depending on the inflation in the country, depending on different policies that are fiscal policies that are in place. And when this central bank rate is hiked, you expect definitely banks to hike their interests that, of course, as they give loans to people in Uganda. Currently, loans have become very expensive. Rates are between 19 to 21% and could rise even further now that we are seeing even the central bank rate rise further. What does this mean? The banks will have to lend money at a very expensive price, that is a very high interest rate. And what will happen to the private sector? Less borrowing, because people will be afraid that they might not be able to actually meet the terms of borrowing, that is being able to pay back that interest. And that is going to lead to a kind of a decline in performance, especially in the private sector that borrows so much from the central banks. And so that is how it comes back to you now. The central bank rate affects the commercial banks. It affects the borrowers who are the private sector participants or players, and definitely affects business. And when it affects business, of course, it comes back to us and how we are going to spend our money. But in the longer run, why the Bank of Uganda always adjusts this rate is to try to bring down inflation. Inflation is brought about, one theory says that when there is a lot of money in circulation, so in order for the Bank of Uganda to kind of regulate the amount of money that is in circulation in the economy, it usually cuts back on, rather hikes some of its rates. And this includes the central bank rate, which is one that the Bank of Uganda always mostly looks at as a means of curbing the hiking inflation rates. Now, the domestic economy, which has weathered several shocks, has still been, of course, facing several other problems like food production decline. Of course, in some parts of Uganda, like in the Karamoja region, it was terrific as people were starving to death without enough food because of the adverse weather conditions. In Somalia, people are dying because of lack of food, and people cannot go to work when they're hungry. So definitely, food production affects the way the economy runs. It affects how productive the country is. And so also the bad weather conditions that have been witnessed in some parts, not all parts, but in some parts of the country, could also be one of the factors that have led to the saga in which we are in right now. Of course, looking at the high rates of inflation and shortages on several goods. Now, regarding of course, recovery of the economy, the consumer price index of economic activity grew slightly from by about 1.2% in the quarter to August, from 1.1% in the quarter to May 2022, supported by increased industrial activity. Also, business sentiments have improved since the previous forecast round. Of course, that is the first quarter and the second quarter. Nevertheless, the economic growth is expected to remain below average, and of course, in the long run, tend to, of course, increase in terms of productivity until the financial year 2025-2026. So we are still anticipating not so good, business activity within at least the last quarter of the year and the year 2023, until at least financial year 2025-2026, when we are hoping things could, of course, normalize here in our economy. Primarily, that is one of the things that stood out last week. And as we were winding up the week, we saw that increase in the rate, and also the stock markets also declined in the United States. The Dow Jones and Nasdaq Composite and the S&P 500 features were all declining. And of course, in what some economists are saying is the great bear market at the United States stock markets. But some investors are still saying this is the best time to buy stocks in the US market. It's never been better. And of course, this attributing this to saying that we should be investing for longer term with a longer term vision rather than a short term if we are to survive in these current financial times. And that is basically what took place in the week. Also, our stock market here in Uganda likewise didn't perform that well, with several stocks performing a little bit slightly poorly, and the days ending with losses and many losing companies, and the indexes as well coming down. But let's take a quick breather. We will return with the deeper analysis and break down a little bit of what happened on the USE and the NSE. You're watching Financial Markets, and my name is Anthony, your host. Stay with us. We'll be right back.